Yo, family, what's going on? We see that the market is starting to move in the direction that we talked about last video. So what do we do now? You know what we do. It's time to protect our money. Let's go. If you're new to the channel, make sure that you hit that subscribe button. That gives you access to all of the future content as well as the prior content. So check out the rest of the series where we've covered the market. And make sure you stick around to the end because I'm going to tell you why I am wearing this hat right here. All right, so let's protect our money. Let's jump into these charts and see what's going on. All right, so the S&P closed at 3,800 ish yesterday, and right now the pre-market is showing that we are sliding a little bit. All right, 3,843, and we're down a little bit over 0.5% right now. So what do we got staring at us right now? We have our blue line, this pretty blue line that we drew. What does that represent? That represents the line in the sand that we need to see this price close above, okay? Because the close is all that matters. We're in the middle of the week and we are peaking above it. We want to see a solid close above this line, above this line. So now that we are above it, what's going to happen? Remember, we don't know. All right, we're looking to see what's going to happen with that close. The 20-day moving average is starting to be resistance once again, as it exhibited back in the past when the market started to first make it slide lower. So now that we're facing off at it again and it's starting to be resistance, what should we expect? We should expect that the market is likely going to face that resistance and probably start to make its move lower again. Follow the trend. The trend is your friend until the end is the rhyme. All right. And until we get that proof with this close above this line here, I can't really put that much of an emphasis to a rally because I need the proof. Okay. I need the body. I need the gun. And that is how we're going to conclude if the market is truly ready to make its run. All right, so that's the S&P. Let's check out what's going on in the Dow. The Dow right now is at, there we go, 31,828. If we take a closer look, what do we got here? This one actually is a little bit above that 20-day moving average. Now remember, all this stuff isn't exact. All right, we get into areas, zones, and we are on the tail end of this trend line that we've set here. So this can also act as resistance. A lot of things are happening, family, but the one thing in common is selling is happening. Wow, we've had a nice little bounce. We have 1, 2, 3, that's 4 in a row. And if you look at the past, here's the situation. We have 1, 2, 3, 4, 5 in a row. 1, 2 in a row. 1, 2, 3. Yeah, 1, 2. We don't really have consistency where we see we've had 5 straight weeks in a row, right? Now that we've had it, something is going to tell investors, let me take my money out of this, and we've got a nice run. That is what's pretty much going to be the case across the market. All right, so the Dow is showing that even though we closed near those highs, we hit a resistance area and we're likely going to start to pull back. All right, so that is the Dow. Let's check out what's going on in Russell world. All right, 18. We've been around the same area. We talked about this last time. 1809. We've hung around 1800, between the 17 to 1800 area. So now we're on the back end of our resistance as far as the moving averages are concerned. We got our 20-day moving average, 200-day moving average, and our 50 days obviously trending lower. Everything is starting to group together and push that price down. So the Russell, the Dow, and the S&P all are hitting some type of resistance as far as the moving averages are concerned. I think the price is going to continue to remain to move lower. We had a projected price target of around 180 and we got there, I think, well, 180 and we got there, and now 180, 1800 and we got there, and now we're making something happen, and I think the market is going to likely continue to make that move lower. Now let's go over to the Nasdaq. Nasdaq is at what? 11,522. All right, so 11,522. And where are we at? Are we hitting the moving average? Let's take a look. Yeah, we're not hitting it that close, but we are bouncing off of the 200-day, and the 20-day is starting to come down as well and put a little bit of pressure on that price. So that is all for the indexes. Let's go directly into our favorite stocks. All right, first off is Apple. All right, make sure you hit that subscribe button because you're gonna get this right here every single week, so we can continue to tap in with what the market is showing us. All right, so Apple 152.34. All right, and family, last time we talked about the resistance around that 150 area, and we are there once more. That 150 area is starting to be a resistance area. We also have our 20-day moving average in that same area, and it has also started to pick up as resistance on charts across the board. And now Apple is showing that 150 area is starting to be a resistance in the aftermarket right now, or pre-market as we get ready to open. 150 is where the price is starting to lay. So that right there is showing we are in a zone right now. All right, so resistance at Apple for 150. Keep an eye on that because that is likely to sell target. All right, so now let's look at Amazon. And we got Amazon at 120.60 was the most recent close, and in the pre-market right now it is down 116. All right, so about $4 cheaper as we look at this in the pre-market. If we take a close look in, and remember, before I zoom in, cup and handle pattern. All right, inverted cup and handle pattern. This is the pattern that I'm looking at right now that I see for the market to continue on that path. All right, zoom in, and oh, no brainer, right here we go. 20-day moving average right now. We started to hit that 120 resistance. We started to hit that, so we had two forms of resistance in the way of the price, and right now it is showing that it doesn't have what it takes to get over there. All right, I think that this will continue to move lower and get back into what our target price area was, around that 105 to 110 area. So I'm looking for Amazon to eventually make its way down there. That's Amazon. Let's go ahead over and check out the Meta world. What we doing, fellas? 137.51 was the most recent close, and it is down big right now. 132, we'll go ahead and say. So about $5 cheaper in the pre-market right now. And this line of resistance has held up pretty good. I'm not going to lie, this looks still pretty good, family. I still like Meta, even though it has gotten beat up. We've got a pattern here. That's kind of a morning star. We'll consider it to be a morning star pattern. If this is truly a morning star, look out, family. If we have a close above around 140, this has the potential to start to make some type of move to the upside. So keep an eye on Meta. 140 is the price target we want to keep an eye on to see if it does have what it takes to keep going higher. All right, let's go on over to our fans over at Alphabet. GOOGL. Google. All right, 104.48 was the last close price, and getting smacked around right now in the aftermarket or pre-market, about 98 or so right now. So what do we got? 100 is still that target price area. We talked about this being a potential bear flag before. It is still on track to be that flag, and once we get that close below the lower trend line, this is going to likely continue to move lower in the price target. You know it, family. We've discussed this. 85 to 90. All right, we're going to look at 85 to 90 as our price target for Google. All right, now let's go on over to Tesla world. Come on, why are we not typing with me? There we go. Tesla, what you doing? 222.41 was the most recent close price. It's hanging around 220 right now in the pre-market. This, ladies and gentlemen, as we discuss head and shoulder pattern, this is what we're looking at. Once we get that close pretty much below 200, we can go ahead and consider Tesla a wrap as far as prices going up higher, because the bear pattern of a head and shoulder pattern shows that prices are going to move lower. So watch out for that close below 200. Let's zoom in a little bit and see what we got going on. I discussed how 220 was a price target for a good trade setup, okay? And in this case right now, 220 is still a good trade setup right now. 220 can be considered as resistance, and a move lower can likely happen from here to go lower, and price target is 190. And why is it 190? And that's because if we look here at the bottom, that we've seen a few times where we've gotten in that 190 area, and that's why I like Tesla to get to 190. All right, that's it, ladies and gentlemen. That is all of our stocks except for Netflix. I was ready to boogie out of here, huh? Netflix is the last one we're taking a look at. 291.02, 288 in the pre-market, or around 290 or so. All right, so Netflix is still hanging pretty tight. And if we take a look closer here, we got an indecisive candle right now as we got closer to 300, and we got our 50-day moving average, and Netflix isn't actually a bad setup at all. It might be one of the stronger ones of the 6. So of all of them right now, I like Netflix. And I've got a love-hate relationship with Netflix right now, because last time I called it for it to go to 190 and it just blew out of that range. I was looking for it to break down because of overall market conditions, and it said, nah, screw whatever you thought, and it just jumped over 250. But we said any move below 220 to 250 was going to be the decisive moment. We got the move above 250, and now we've gotten to almost that 300 price target. So that's it now, ladies and gentlemen. All right, the strongest of the 6 right now looks to be Netflix, because we made a strong move higher. So now back to what I was saying. Stick around to the end and why I'm wearing this hat. Check this out. All right, Phillies, the Phillies. Okay, Phillies are in the World Series, but there is something unique about the Phillies winning the World Series, and this is why I'm wearing it. All right, so check this out. All right, every year the Phillies win the World Series. Okay, so if you Google it, this is one of the articles that you will actually see. All right, the Phillies made the World Series. There's a stock market crash next. I want lower prices. I'm sorry. I just want lower prices. I want to be able to put my kids into a great position. All right, I got 3 girls. I want to be able to buy as many stocks as I can possibly get and put them on a path that I never was on before. But anyway, World Series, Phillies. Now, if we go down, and you can read this article, it's on Market Watch. Here's the historical precedence of the Phillies. All right, Philadelphia A's in 1929, and if you're not familiar, we had the stock market crash in 1929. All right, Phillies won the 1980 series. All right, 80s recession, and we also had a crash at that point in time. Right, Phillies won the 2008 series. This is where I first got hip to it. The Great Recession then, and we also had a rapid move lower in the market. And now the Phillies are in the 2022 World Series. So, go Phillies! I want lower pricing. I'm selfish, I'm sorry. But we can also buy puts, and we can do that too and make money on the downside. All right, so that's it, ladies and gentlemen. Health is wealth. Make sure you take care of yourself. I want everybody to do what they can to be their own gem. All right, health is wealth. Take care of yourself. Exercise, drink your water, and spend time with people that you love. And we will catch you next time. All right, peace.